Investors continue to be concerned about the global economy. Growth figures for next year have been cut. Economic momentum continues to be hit by rising trade and geopolitical tensions, putting the world economy in what's been described as a precarious position. Ole Hansen is head of commodity strategy at Saxo Bank. He's with us here once again in the studio. Great to have you back with us, Ole. We're seeing the easing of interest rates in the US for the third time this year. What effect is this currently having then on commodities?
Well, I think first of all it's having quite a significant impact on equities because they have probably benefited the most. Just recently we saw a new record high in US stocks over the past week or so. But it's also helping to support precious metals, especially gold, which after a 4-year range-bound behavior has suddenly broken out back in June. This collapse in global bond yields is really helping driving market higher to these levels. Probably at this stage, you could also argue that something like the oil market is finding some support, even though there are these growth worries, because the cutting of interest will obviously try to offset some of these worries in the global market.
What about the markets themselves around the world? How are they being affected? And, because obviously as the growth figures don't look fantastic, there is concern there, isn't there?
There is a concern, but I think also the reason why we, for instance, industrial metals, which should be growth dependent, we haven't seen any major sell-off over the past 6 months, is the fact that the supply side is also having a few issues. We've seen that in copper recently with the unrest in Chile, which is cutting supply from the world's biggest producer. That's helping to keep the markets supported. So even though we may have worries about demand, when at the same time we're also potentially seeing some supply issues, that's basically keeping the market relatively stable.
Let's look at the oil price. What are the current factors we should be looking out for, with the oil price, and also whether the price of it will go up or down?
Well, we have this tug of war now. We had that now for many months between OPEC and Russia cutting production. At the same time, we've got a downshift in global growth, and with that also down revisions towards global demand in crude oil. That battle is still being fought, but I think at this stage, we just had the announcement about Aramco over the weekend, and I think with that in mind, Saudi Arabia will do their best to continue to support the market, not necessarily drive the price higher, because higher oil price at this stage is a tax on the global consumer, but at least try to help stabilize the price. So we're looking for this. We're fairly optimistic that this $60 level in Brent is going to be relatively close to the low point, and I think the joker into 2020 is perhaps a smaller increase in US production that we otherwise would have thought, because they're also starting to get squeezed. Investors want a return for the capital, and are not getting it right now.
The British pound is, a big low at the moment, and that's good in a sense for expats here in the UAE. But what about for investors in the UK? They're not seeing their money go quite so far.
Oh gosh, it's a horrible scenario, and everyone is getting very, very frustrated. It's almost a never-ending story. There is obviously hope now that we can get the air cleaned out a bit with the election coming this December. The problem is right now, is it going to be an election between Conservative and Labour, or is it going to be Brexit and Remain? And that could, if it's the latter, it could potentially trigger some votes for the party in the middle, the Liberal Democrats, and that's overall that could prolong the situation. Overall on sterling, I think the upside is limited at this stage. UK is heading towards a recession, and they need the clarity, and they're not really getting it.
Great, fantastic. Well, appreciate you coming in tonight. Ole Hansen, many thanks. Time now to have a look at the UAE markets along with today's most active stocks.